This is the Rich Dad StockCast with Andy Tanner, the show that kicks 401ks in the asphalt and teaches you to be the master of your own stock investing domain. And here's your host, Greg Arthur.
Hey everyone, welcome to the show. Now this is a very different show than normal because we're going to talk about stock strategies, but in the cryptocurrency universe. Why are we going to do that? Well, so many, and I mean so many of the comments y'all leave are about cryptocurrencies. And in the past, crypto investing, to my knowledge, was purely a speculation play. And Robert Kiyosaki always says speculation is super dangerous unless you have a crystal ball or a time machine. I'm going to bank on that you guys don't have that. So it's easy to get caught up in the excitement or believe you know some secret or inside trading tip. But if you're predicting the movements of the market, then you're speculating. And a lot of people lost a lot of money speculating recently. Why? No one saw COVID-19 coming. The economic crash that followed it, or the government stimulus package. So what I'm trying to say is in the future, anything can happen. War, disease, discovery of some new deep sea creature, space aliens landing on Earth, anything can happen. So I think I've covered why we at Rich Dad are not fans of speculation. And in the past, crypto investing has really been based on speculation. So while Robert does buy Bitcoin, he does it as a hedge against the dollar, not as an investment. But on this podcast, Andy Tanner is about to change all that. He's going to teach us some new developments in the crypto world that could make investing in crypto possible with a risk management mindset and profitable for those who have the right education. So with that, let's bring in Andy Tanner. Andy?
Hey guys, it's good to be with you, Greg. Thanks so much for having me. I so enjoy our time each week. It's way fun. So thanks for having me.
No, thank you for being on the show.
Awesome. So Bitcoin is an interesting thing, and crypto in general is an interesting thing. I fought it for a long time at first. You know, there's personalities that just love the next new thing. You know, it's sexy, it's hot, and you know, I've seen so many so many people get enthusiastic and they trade on the emotion, the newness of it, and they don't keep their emotions in check. You know, they say, "Oh, this is the greatest new thing," and greed. This is very important. There's two emotions that we're going to do our best to master. One is greed and one is panic. And they're both out of fear. Greed is when you haven't done something and you're afraid that you lose out unless you do. You know, greed is wanting something for nothing. Greed is wanting a lot for a little. Greed is wanting a windfall. Greed is thinking there could be a lottery ticket and you didn't buy it, and it's fear of loss. And that's how guys like Bernie Madoff operate. And, oh, here's the train, better get on, or, you know, it's leaving. So that's one emotion you have to deal with when you're talking about new investments. The other part of this is panic, is once you're in the investment, if it starts to go south, then people often bail way too quick because they're so afraid of losing what they got. So greed is the fear of losing out on what could be. And you know, you get a belief that, you know, that you want it to happen so bad, you just get a belief that it will. And panic is when you are afraid. You know, you see your 401k dropping like crazy and you panic. And Warren Buffett always talks about being, a contrarian. You know, be greedy when others are fearful and fearful when others are greedy. So the first thing I would say when it comes to Bitcoin, ask yourself what type of investor you want to be. Do you want to be an emotional one, or do you want to be one that's driven by facts and data? And if the facts and data are on your side, well, then great. We can begin to talk about some principles of speculation. We can talk about cash flow. And we can talk about hedging, all three. So that's how I'd start that out.
That makes a lot of sense. You saw both emotions when Bitcoin was soaring just a couple of years ago, and it was like this steep climb to 20,000. Then all of a sudden, everyone like panicked and bailed out, and then I think it dropped all the way down to like 5,000.
Yeah, when you go to 17,000 and then back under 10,000, and you're having 50, 60, 70% swings in something, that's definitely because of supply and demand and emotion, isn't it? For sure, it's thing. So let's talk about some of the things. I always start with risk. Right. And then I back out from there is how I can manage it. So let's talk about some of the things about Bitcoin that are interesting. First of all, Bitcoin is supposed to be a digital currency. So what's a currency for? You know, if you try to use a hammer as a screwdriver, you're going to be in trouble, right? You're not going to, do really well is if you try to use a microwave oven to send email with it, right? They're just not built for that. So when you say this is a cryptocurrency, what's it supposed to do?
Well, I guess there's a couple different kinds. There's the Ethereum, which is supposed to create contracts, but I do not know any.
Well, I mean, if I just said the word currency, not crypto, if I say, hey, you have currency. All right, let's look at some different currencies that are not crypto. What is the purpose of a euro?
To purchase things.
To buy stuff. It's a medium of exchange. Currency means it's supposed to what? Supposed to move.
Like current, right?
Yeah. So when it comes to my checking account, how much currency do I want to have in my checking account as opposed to assets that I actually, real estate, stocks, businesses, gold, do I look at real estate as a currency? Some people looked at gold as a good currency. That's possible, but it's also a commodity. And so one of the things is in Europe, you can spend a Bitcoin pretty easily. But which is faster right now, Apple Pay or buying something with Bitcoin? Have you bought anything with Bitcoin before?
No, I have not. No.
It's an interesting process. It's not quite, and I'm sure it'll get there. I'm sure it'll get there to where it's easy as click Apple Pay. Facial recognition's done. I think Apple Pay is the easiest way to ever pay for anything. So, that's one of the reasons I like Apple. They're not just about computers. They're about, they're competing with American Express now. Which is easier, typing in my dang number and putting all this stuff in, or just smile, facial recognition, and click. So currency in my brain at first, I says, well, I don't like investing in things that I keep in my checking account just a few months of expenses worth. And other than that, I have no interest in having currency. I want assets. So that's the first thing. The second thing is there's always risk and unknowns. We're going to get to the positive stuff. Don't worry, we will. But there's 21 million Bitcoins or whatever it is that can be mined. And what people don't understand is, and I'm still learning about it. I don't claim to be a cryptocurrency expert. There's probably people, not a lot of people, but there's probably a handful of people that know more about this than I do that'd be watching. Most probably not, but some definitely, because I'm still learning. This podcast is really, this episode, most of the time when I talk about options, I'm talking about stuff that I'm doing. I'm talking about, this is new. This is stuff that I'm still learning. Have I bought Bitcoin and sold it? Yes. Do I have some Bitcoin ETF? Yes. But that doesn't mean I'm not learning and consider myself a student in it still. I think that's the safest way to think about it. So Bitcoin, it's gonna peak someday, and the way it works is the way Bitcoin's mined is you become part of the ledger checking system. Blockchain technology is about keeping a ledger that's carved in stone, that's immutable. It's not, you cannot change it. And so once a transaction is recorded, it's then verified by other blocks in the chain. And this will be definitely a technology that's not going to go away, and it's going to actually infiltrate for the good contracts, agreements. The idea of a ledger isn't just for transactions of money, all kinds of things. In my opinion, that's the way we should vote. That would cause a lot. Right now, in the US, there's a lot of consternation over the election and what counts, what doesn't. Blockchain would solve that, right? It'd be a verification. You voted, it's in stone, there it is, verified. Another issue with Bitcoin is how easy it is to be lost. If I have a bar of gold and I'm out fishing, it falls out of my pocket, at least I can get a scuba diver to try to find it. Boy, you lose a digital Bitcoin, it's gone. I mean, it is, I don't know how you would recover it. So there's a lot of things. What happens when it runs out? As you mine Bitcoin and become part of the system, your return is diminishing. Originally, I think if you, did a certain amount of work in the network, they give you 6 Bitcoin, and then it goes down to 1, and then it goes down to half, and that will continue to diminish until, I think the pace right now, they'd say it's probably the year 2140 is where they'll finally hit that 21. Well, there's probably 18 million of the 21 mined. So in a very short amount of time. And so that last 3 million Bitcoin will be mined over the next 120 years. So your returns for mining Bitcoin are going to diminish and diminish. And I'll tell you, once you hit the 21 million mark, the human nature says that's really it. That's all the gold in the earth there is. That's all the Bitcoin available ever there is. And then some guys can say, oh, I got this other one. So, and who says that blockchain technology is the final technology? Whenever you deal with technology, you have something called obsolescence risk. You know, a person that gets impassioned, I would warn the gold bugs, the stock bugs, the real estate bugs. Everyone tends to fall in love with what they invest in to justify themselves. You know, if you voted for Biden or if you voted for Trump, you're going to defend those decisions emotionally. And if you read Benjamin Graham's book, The Intelligent Investor, intelligence goes away when when you're emotionally invested. If you're emotionally invested instead of financially invested, if you're going to defend things emotionally, you're a low-level investor. So there's a lot to be said about the volatility of Bitcoin, about the uncertainty, the obsolescence risk of technology, the idea that the Legends Room in Las Vegas, Nevada, can have their can dancers put a QR code tattoo on their ribs and get a lap dance for their very own cryptocurrency that they've invented, tells you that, you know, crypto can pretty much be invented by anybody. And, it's like the wildcat banking of the 1800s. So I'm not trying to shoot down crypto. It's just like when I'm going to invest, wouldn't it be wise to look at all of the risk instead of saying, oh, that's not going to happen? No, these are legitimate things. We do not know what will happen with this. Final thing I'll say, Lagarde comes out today, chairman of the European Central Bank. She comes out and says her hunch is that central banks will go digital. Now, here's an important thing about MMT. Do you think central banks and nations like a decentralized currency?
My understanding is absolutely not.
Because they lose control of the people, right? You control the currency, you control the people.
That's why Robert calls
part of the appeal. Robert often say that gold is God's money, a dollar is the government's money, and Bitcoin is the people's money. I've heard him say, I think that's kind of a cool way to say it. Gold is God's money. He's the one that created that. The Bitcoin is the people's money. We're creating that. And the government created the dollar. And so that's whose money is whose. Well, the problem is MMT, your ability to print money, according to modern monetary theory, your ability to print money is dependent on your ability to require that same currency back in the form of taxes. So the thing that keeps a dollar strong is the ability of government to say, here's how many dollars I'm going to require for you. And the higher the taxes, the greater demand for the dollars because you got to pay them. So all they have to do is tax Bitcoin. And you'll notice in the United States, the IRS for this year, you had to record your Bitcoin transactions this year because it's got their attention. And so you've got to report. If you have some Bitcoin, you got to report that stuff or the fines start coming. So you can already see the government, okay, great, Bitcoin is decentralized. We don't care about it. We can get away from government money and just have our own transactions in this ledger own money. Fine. But ultimately, the government will decide how much of that money they're going to take in the form of taxes and how much control they want to give you. So I think it's very much an illusion that Bitcoin frees you from the government. If you don't believe me, go back to FDR when he said owning bullion's illegal, you got to turn it into the government. Well, they changed their mind in 1971 or 4, whenever it was, said, okay, you can own gold bullion again. But the government decides what you can do, and you can get emotional about it, and you can argue with me, and that's fine. I don't really care. But these are things to think about. So that's the risks And, so what does that say? I probably don't put all my eggs in the Bitcoin basket. Now, let's flip to the positive side. And you can interject because I'm talking too much in this podcast.
No, this is fascinating. I do want to say one thing, though. Two things. They did just come out with a credit card in the U.S. that uses Bitcoin, which is pretty cool. So they are trying to transform it into a currency.
Yeah.
How do I get the cryptocurrency for strippers?
I don't have a gold card there, and I don't even know if it's still. I just read an article years ago about a place in Vegas, and they literally invented their own crypto. I think it still trades today. I don't know. I never bought any of it, but yeah, it's a new thing and it's sexy. And so, hey, let's get your phone out and scan your stripper's ribs or thigh or whatever. And next thing you know, you're rolling. So it's kind of crazy. That's probably the lowest end of it. And then Bitcoin's probably the highest. You got Ethereum, all the others. Now, let's talk about why talk about it then if there's all these risks. Well, I could do the same thing with Apple Computer. I could do the same thing with real estate. I could do the same thing with stocks. You can find the risk is everywhere. So to say, oh, Bitcoin's bad, no, I never bash an asset because there's good and bad to all of them. And I always start with risks and things to think about before I get all hyped up and stoked. Ask all the people that got in at 17,000 of Bitcoin, and then they got agreed. And then when it fell down under 10, they panicked and sold it, and they lost, a third of their investment. Right, Those that have held it are preaching its praises again because it's back up at a high. So it's very volatile. It's just like any other investment that way. So let's talk about why this is important. Number one, digital is the future. There's just no question about it. Now, we don't know what it's going to look like. We don't know where it'll all settle. But there's just no question in my mind that if you look at trends of music, you went from a vinyl record to an 8-track tape to a cassette tape to a CD to an electronic MP3 file. And it's probably not done there. There'll probably be other transformations in the future. An MP3 is not going to be the last digital advancement in digital music we see, but it definitely went digital, didn't it? Blockbuster video is out of business and Netflix just killed them. So anyone that doesn't see the exponential growth of technology, most of our currency is digital anyway. They don't print very many greenbacks. We got a coin shortage in the United States for a reason. They're just not used anymore. You don't go in like Warren Buffett does and say, here's, $2.21 for my Egg McMuffin. Most people just put on a credit card and very few cash transactions in comparison to the 50s. So there's no question this gets your attention. The second thing is just as I said, the decentralization, the governments aren't going to be happy about it. A decentralized currency, what's not to like if you can do it? So having some exposure to that's a huge deal, because if there's a fight between crypto and a dollar, probably having a little bit of both is pretty smart. But now we're talking hedge instead of cash flow.
Right.
So let's talk about crypto. There's a lot of good about it. There's, if it is ended at 21 million, it does end at that. And they're getting more scarce. They're going to get more valuable. It costs a lot of money, even in China, for to mine a Bitcoin. Dude, it takes a lot of money to mine a Bitcoin. There's a lot of hardware, a lot of electricity. It's legit expense. So you have these Bitcoin farms in China where, it's cheap, hardware and electricity is cheap, but their returns are diminishing. So no wonder that you're seeing a Bitcoin go up as the scarcity increases and the demand increases. So from a supply and demand standpoint, that's pretty easy to see and be bullish on Bitcoin. It really is.
Absolutely.
So I like it, but let's talk about 3 ways to look at it. Let's talk about hedge. Let's talk about speculation. Let's talk about cash flow and all the different ways you could expose yourself to it. Okay, first, I like Bitcoin as a hedge, and I'm going to disclose that I have exposure to Bitcoin as a hedge. So just as I have physical gold as a hedge against the dollar. I also have got on that bandwagon to say, I want some Bitcoin. But here's what's interesting. When I buy gold, I don't care what the price is. I just buy it.
Right.
I don't try to time the market because I'm buying it as a hedge. I'm not buying it to buy low and sell high. Let me say that again. Go ahead.
I just want to clarify. When you say a hedge, what you're talking about, and tell me if I'm wrong, is basically insurance that the dollar could crash in value. And
that's exactly right.
Protects you from that.
It's a teeter-totter, right? As one, you're here, and if one falls, the other one rises to still average you in the middle.
Right.
If one falls here, the other one rises, and you average in the middle. So when I buy insurance, this is very important. Insurance is an expense. Insurance is an expense. It's not an investment. It's an expense. When I pay my health care bill, my health insurance, I see that in the expense column, not the asset column. Let's be very clear. When I pay for my car insurance or my home insurance, I see those as expenses, money going out. The only time that turns into an investment all of a sudden is if my house burned down, my car wrecks, or I get cancer again. And so when you look at a hedge, that's money you say bye-bye to. The only difference between gold and insurance is my insurance contract expires on my car every 6 months, or on my life insurance every month. I have to keep buying it. Gold does not expire. Bitcoin will probably not expire unless it, gold's going to be here. You can't get rid of gold. You can't split those atoms. Bitcoin could be gone in 50 years, could be gone in 10 years. The bigger, better deal comes out. Gold's going to be here in 100 years because you can't get rid of it. If you dump it in the ocean, it's still in the ocean. Bitcoin is a bunch of ones and zeros that we came up with that we could delete totally, right? We just get rid of it all. So it's not a physical thing. But I'm going to treat it that way in saying, look, when I buy gold, don't really care what the price is because I'm not trying to buy it low and sell high. Best case scenario, my grandkids inherit that gold. Best case scenario, my grandkids inherit that Bitcoin. They can do with what they want. But I am not trying to time the market buying low on gold or Bitcoin and selling high if I truly want to hedge it against the dollar. So I'm going to give that a thumbs up. I'm going to say that's worth learning about, in my opinion. We're studying. And I'm at the point where I think it's worth having some exposure to it. I bought some Bitcoin at $300 I bought like one or two just to see what it was like, and I had to go through all these wallets and stuff to even find it when it hit 10,000, right? And then I sold it for some gold, right? So I've been back and forth. Now let's talk about cash flow. Okay, if I buy Bitcoin, well, let's talk about speculation. If you do want to buy low and sell high, use the 4 pillars of investing. Use fundamentals to understand central banking policy, and use technicals to look at a very volatile chart. And so to speculate, you can do that without a crystal ball, but that's where you use entries, targets, and exits. And you have to say within yourself, this is very important. If I'm going to speculate on Bitcoin to make money as a speculator, I have to decide my entry, I have to decide my target, and I have to decide my exit. And I have to believe my target has greater potential than my exit. But you don't buy Bitcoin at $17,000 and let it fall to 8. Okay, you're not going to do that. And people say, well, I don't think that's going to happen. Well, if you didn't think it was going to happen, you wouldn't have bought it in the first place. I get that. Right, but risk management is planning for what you didn't think was going to happen.
So quick question. Are you saying you have to know those 3 things before you get in? And you follow that laid out plan no matter what, so that
minimum 5 things. Yeah, minimum 5 things. I got to go know my entry, my target, my exit, my reward, and my risk. Those are the 5 things I got to know at a minimum. Like at a basic stock trader, you would do it the same way you speculate with stock. You have an entry, and that's technicals. That's really technicals and some fundamentals to a degree. But I would not, if I were going to speculate on Bitcoin, which I won't do, I would buy it, and I'd say this is the max amount I'm willing to risk in speculating it would go up, And if it hit that, I'm out. And if it goes up, great. So there you have exposure to unlimited upside, but you have a limited downside. So we teach that in the 4 pillars for speculators that want to do that with stocks. Bitcoin would be no different. I can do a little bit of that with the ETF, and let's talk about cash flow. So speculations, buy low, sell high. Look at your chart of Bitcoin. Get your 5 things down: entry, exit, target, risk, reward. The problem with Bitcoin with cash flow is it's very difficult to cash flow because it's currency. It's not going to pay a dividend, right? You're not really mining the Bitcoin. You're not producing any value. And, one of the things on my wall that it says right here is if all you succeed in doing in life is getting rich by buying little pieces of paper, it's a failed life. So I would say the same thing by ones and zeros. If I'm buying Bitcoin low and selling Bitcoin high, what value to the world did I produce? If I buy the euro low and sell it high, foreign exchange, you're really out of the value game. Where if you're Warren Buffett and you sell Dairy Queen Blizzards, you're providing a service. If you're like Kenny McElroy and you have housing, you're providing a service. So, if you want to, even if you own a casino, you're providing entertainment that way. So, speculating Bitcoin, you're really saying, look, I'm not interested in being an entrepreneur and giving value. I just want to get rich, which is fine, which is fine if you want to do that. But you're not going to be buying a business because it's a currency. And really all assets boil down to a business. You buy Delta Airlines stock, you're providing flights for people. You buy Kenny McElroy's syndication, providing housing for people, right? If you buy a mining stock, you're producing gold watches and components for computers for people. But once you decide to go into Bitcoin, it's all about you. I want to get rich by buying low and selling high. Now let's talk about cash flowing. How could you cash flow this? Number one is you could go into the debt market and loan your Bitcoin. You got places like BlockFi, and they pay less for Bitcoin than other digital currencies. Some of their digital currencies pay 8-9% a year. But you can absolutely loan your Bitcoin out. Another thing you could do is take your hedge, your Bitcoin, and this would take some financial education, but you could use as collateral to double dip. In other words, much like infinite banking works, is you've got your Bitcoin here as your hedge, but you're borrowing against it to use that equity, almost like a HELOC, really, to use that as collateral. A HELOC is just saying, why do I have all this money sitting in my house not working for me? Well, I could take that money and maybe go out and have a cash flowing investment. You can easily borrow against your Bitcoin. You could invest if you're an accredited investor. Like when I look at gold, I look at the 3 things. I look at the actual gold as a hedge. I look at the ETF to sell, like GLD, to sell options on for cash flow. Or I can buy Barrick like Buffett did and be a miner of gold. Well, accredited investors, you go to like Bitfury, who's a blockchain technology company. Accredited investors can invest in those mines. So if you're investing in a Chinese mine or in a Bitfury mine and you're making Bitcoin, now you are creating, and that would give you cash flow every time someone buys a Bitcoin from you. And so there are ways to do it. And then you've mentioned, there's the ETF, GBDC. And the reason I don't like GBDC, I do have some because I just play with it. I don't own a lot. It's not optional yet. But I think the trend will be that way. And what's important about this, why would I buy some ETF of Bitcoin now in addition to real Bitcoin, digital Bitcoin? The reason is if that becomes optionable, it's a lot like a dividend. Let's say, like right now, let me look over here. Let's bring it up. Grayscale Bitcoin Trust, the main ETF for Bitcoin's at around 18, okay? So it's like 1% of a Bitcoin. Well, if it ever becomes optionable, let's say those options pay 1% a month on premium. Let's say that's the average for a 1 strike out of the money, 2 strike type option. Well, if I can buy that now at 18, and let's say this goes to 50 in 4 years, now I can sell options that are way out of the money on a cost basis that caught me very, very little. And my investor yield would be enormous with very low risk option selling, that if I did call out, I got ridiculously rich, but I get a better ROI, just like a dividend, right? If I buy Coke at $3 and their dividend winds up $1.60, I'm making 50% on my money. So the reason I might speculate a little bit on the ETF and start building a bit of a position on that is I do believe someday those will be optionable, and the SEC will grant it, and it'll be on the general exchanges. And if my cost basis is low, the covered calls I'll be able to sell on that will be way out of the money and will be ridiculously lucrative compared to the cost basis I paid for the ETF.
Right.
So
I
that's
didn't even
a cool
know they'd have
cash.
that. That is
Yeah.
amazing.
Yeah. So, and it's not widely traded yet. It's not thick. Another one, you could get exposure, like you've got the ARK-W. I've got a little bit of that. She invests. It's kind of like a fund ETF. It's actively managed. It's done very well, but you only have about 3% of that in Bitcoin. But if Bitcoin took off, you would have exposure. But she has, like, for example, she had a lot of Tesla in that, the lady that runs it. And because she had that Tesla in there, that thing soared, right? Well, if Bitcoin soars, she's only got about 3%. She's got about 100 million in Bitcoin probably in there. So you're going to get some exposure to that 100 million. The other thing you brought up that I think is really an interesting thing to think about is, as you leave the exchanges and you look at other blockchain opportunities, there are companies that allow you to trade options. And this is dangerous when you get out of regulated. Bitcoin's had a lot of fraud with it. And right. So if you go outside the US or outside your home country, and you want a grievance, who's going to listen to that? And so, the government's kind of corrupt, but at the same time, it's good to have an exchange that's at least regulated. But there are options traded. And what that means is options education. If a person doesn't know what a delta, theta, vega, gamma, rho, if they don't know strike price, if they don't understand standard deviations, you're not going to cash flow Bitcoin by selling options on it. And that's good news, because I always tell people, they say, my 4 pillars class works on any investment, real estate, business, whatever, because it's all the same stuff. It's numbers, it's charts, it's movement, it's fundamentals. It doesn't matter what country you're in, you're going to have income, expenses, assets, and liabilities. So, bottom line, Greg, there's a lot to be learned. Do you want to loan your Bitcoin? Do you want to borrow against your Bitcoin? Do you want to use it as a hedge? Do you want to speculate with an entry, exit, target, risk, reward? Do you want to be a technical analyst speculating? Do you want to use the ETF to do it? Because it's funny, people are going to say, well, that's not real Bitcoin. Well, Bitcoin ain't even real, right? Now, I mean, at least the gold guys can say there's physical gold. Well, this is a real Bitcoin. Well, it's all digital anyway. So, do you do what I'm doing, build a little position just in case in the ETF, because I can't sell options. Well, eventually you will, maybe not on the exchanges to sell options, but if you buy some Bitcoin now and it doubles or triples in price, the low risk, out of the money covered call strategy is one that I think could be legitimate down the road. So let me confess once again that I'm still learning about Bitcoin. I'm still studying blockchain, but it's become a priority in my financial education as something that, I kind of looked at, rolled my eyes. And I'll just say this: don't let greed get you. Look, Buffett's not a fan of Bitcoin, and he's a pretty smart guy. He's been around 100 years, 90 years old. And think about this. He does know this. Well, I don't know, like, the greed is just huge. Well, Bitcoin's the next thing. Bitcoin's the next thing. Yeah, but people are always going to be buying underwear, and we know that. So Fruit of the Loom's a pretty good investment for him. And as much as Bitcoin goes crazy, I'm still going to need a roof over my head. And so real estate's pretty solid. And if Bitcoin can't teleport me to Hawaii, so Delta Airlines, they're still going to provide a pretty good service. So if I can achieve my goals with real estate, business, stocks, and commodities, Bitcoin is another option, but it doesn't supplant all this stuff. People say, well, Bitcoin performed better than this or that. Never get into bashing the asset class. Let me tell you something. T. Boone Pickens has done, whoever's watching, T. Boone Pickens did better with gas and oil than you've done with Bitcoin. Buffett did better in stocks than you did with Bitcoin. Kenny McElroy's done better in real estate than you with Bitcoin. It's not the investment, it's the investor. And a great Bitcoin investor will do better than you than an uneducated Bitcoin investor. Your success is not a function of Bitcoin. It will be a function of your education and your personal development, just like any other asset class. Trying to go for advice without an education never works. So it never changes. If a person wants to make money in Bitcoin, earn before you learn. It's not Bitcoin that will save you. It's this that will make you great. So that's a long-winded podcast, but it is an important thing to address. And I hope people enjoyed the discussion, if nothing else. Am I a fan of Bitcoin? Yeah, I kind of am. I don't know where it'll go. I'm still learning. There's a lot of different things now. Loaning it, investing in mining companies that mine it, using it as a hedge. I mean, there's so much to learn about how it works. What are the competitors? What's going to happen to blockchain? What's blockchain 2.0? What technology comes out that replaces blockchain completely and blows? I mean, if you really like, let's say that Bitcoin is the DVD. You know, you've got, you know, the 8-track tape is gone, the cassette tape's gone. Now you got the DVD. Well, the DVD was not the final thing. There's always another technology to supplant the DVD. Well, Bitcoin's pretty early. If you look back at the history 10 years from now or 20 years from now at the history of digital currency, how do we know Bitcoin's not word perfect or Quattro Po or, you know, Garmin, right? Companies that you thought, oh my gosh, Garmin's amazing. They didn't know it'd be in my iPhone in 2 years, right? Apple, their guy, you think they're going to sit around and let other the Bitcoin have all the love? They got people smarter than us. Apple comes out with a digital currency. Who knows what happens to this, right? So you have to just understand that it can't be all about Bitcoin. You got to be smart.
Okay, we do need to wrap this up. It's been a longer podcast.
Too long.
I do want to take one issue.
Our producer, Rob, is swearing at us right now.
I know. But earlier you said Bitcoin doesn't have a value, like real estate is a housing for people that need houses. But I would question
it is a value. No, it has value. It doesn't produce it, is what I'm saying.
But what I'm saying is, in a way, it does, because it keeps the government in check. It's communicating out there, hey, government, we don't like what you're doing. And that is a value. That's a new way to have a voice. A wise man, Mike Hussey, who I think you've met, he once told me, don't listen to what people are saying. Look at their actions. Every dollar they spend is a vote. So every time you spend $1 on Bitcoin, you're voting against the government regulation and you're voting for freedom.
I couldn't disagree with that. I really couldn't. I guess what I was saying from an entrepreneurial standpoint, you know, what are you producing for another person, right? What you bought low and what you sold high. That's all I'm saying. I'm not disagreeing that it's not valuable. Obviously, if someone will trade dollars for it, it's valuable. It's just, what are you producing? That's all I'm saying. So I couldn't disagree. And I like the idea of decentralized stuff. Just how far can you decentralize before the government says, you know what? You got to pay us in dollars, and that's how your taxes go. We don't accept Bitcoin. And by the way, if you have Bitcoin, we're going to tax it at X percent. You know, they could do that if they felt threatened. And if they do that, what are you going to do?
Move to Ethereum. I'm just kidding.
Yeah, go exactly. What are you going to move to Australia? You know, I mean, there you go. So there's a lot to think about. Great podcast, great discussion. I don't have all the answers. People disagree 100%. They can disagree. And I like that idea. You know, not everyone should agree with Andy, or you'd probably be best off disagreeing with me in a lot of areas. And so hopefully you look back and say, you know, this was just a really good discussion and gave me some things to think about. And most importantly, the only thing I would hope is don't get in vice mode where Andy said this or that about Bitcoin. The thing to leave with is, do I know everything I could possibly know about Bitcoin right now? That's the question to ask yourself. Do I really know this inside and out? Am I the smartest person in the world on it? before I invest in it, right? So there's a humility that I think that I hope to inspire in people to say, well, gee, Andy spends a lot of his time studying. Maybe I have some things I could learn about Bitcoin too.
Yeah, of course. It always goes back to education.
It does. Yeah, that's our mantra.
I hear you. Well, Andy, thank you so much.
Fun one. Really fun.
Thanks,
See you next week, man.
All right. Thanks, bud.